I should explain this in the email, and I apologize for not doing it. We're going to do chapter 4 before we do chapter 3. Chapter 3 is probably the hardest chapter in the book. And I think if we did chapter 4 first, that it would be helpful. I mean, it's not that the book's in the wrong order or anything like that, but I just think it would help if we did chapter 4 first. So we're going to do chapter 4 first, and then we'll go back and do chapter 3. And again, chapter 3 is it's difficult, you know. So it's I'll put it to you this way: chapter 4 is a lot easier than chapter 3 is. So we'll do chapter. I don't want to say chapter 3 is terrible, but we'll do chapter 4 first, and that'll, I think, give us a lot of insight into chapter 3 anyways. Okay, so we're going to start out with, I had it up and I closed it. Share my screen. This thing. So if you pull that up, if you don't have it, it's in Blackboard under the files, the course files. Is there anyone that doesn't have it? I know we have a problem with the email sometimes.
I didn't get the emails again this week.
Okay. Let's see here.
But I have it printed out already. I was just going to tell you that.
Oh, you got it? Okay. I wonder if we got the emails wrong in the Blackboard. Yeah. You know what? Maybe stick. What's your name?
Landon Smothers.
Okay. Let me see if we got the emails right here. I will look into that. There are problems with the emails. I think we just got to. I think they just got to knock them out one at a time. Figuring out what's wrong and all that. Okay. So this is what you should have: the handout. And kind of goes on from there, but this is so these are the journal entries, and the journal entries are what we've been doing. So this is all chapter 2. So this you've done these journal entries before. Now in this case we have these are the journal entries already done. We don't have to do the journal entries, they're already done. Now, when you look at this, though, look at this journal entry, the sheet with all these journal entries, it's very difficult to know how much cash you have, for instance. The first one has 24,000, 7,000, some cash in the third one, some cash in the fifth one. Anyway, you can't look at this really and get any kind of a sense of how much cash you have. Again, journal entries are for quick writing down a transaction. You take the 2 or maybe 3 counts you need, you write it down, you're done, and you go on. But if we want to get the balances, we have to take these accounts and we're going to put them into what's on the second page here. It looks like this is a ledger. It's a ledger. I'm going to do something. I'm going to switch cameras. Switch cameras to, because I'm going to be doing adding over here. The little doggy will just sit here until I need to use my calculator. I have him trained to bite people that try to take my calculator. All right, so what we're going to do, though, is take these accounts and move them over to, this is what they call a ledger. The ledger, it used to be a huge book that sat on the ledge by the window, so they call it a ledger. Okay, so I think I can get these both on the same screen here if I. Okay, so what I'm going to do is we're going to use these journal entries. By the way, can you guys see this okay on your screen, or is it too small? Is it too small?
I see it good.
You see it okay?
Yeah, I see it good, Professor.
Okay, all right. So what we're going to do is take each one of these and move it over to here, and I'll show you what I mean. This first one, cash and common stock. So cash has a debit of 24,000. So we're going to come over here, and under the cash side, on the debit side, I should say, we're going to put 24,000 in. I'll make it red just so we kind of know what it is. So I've taken this first one. I can insert something there. Can I insert something? That's what we need to insert some kind of put a star by it. Okay, there we go. Okay, so the debit is for cash. The credit is for common stock. So I'm going to come down here. So what we're going to do is go through here and fill out these accounts based on these journal entries. And basically, the journal entries are for a company that's brand new. They just started. They just opened up. The owner put in $24,000. And they had these journal entries for the year. And so what we're going to do is the first year company, and we're going to go through and do the general ledger for this. Okay, so we go to the next one. Oops. Okay, cash is going up by a debit of 7,200. Yeah, let's make that, I don't know, that color, whatever that color is. Okay, so
Excuse me, Professor, I have a question.
Yeah.
Did you send out more than one of these? Because the one I have shows a debit of 3,000 for cash. It doesn't show 24,000.
Yeah, me too. Me too as well. I got 3,000. The handout for 3,000 as well.
For problem one? It says problem one on it?
No, it's problem 2.
There should be one that says problem 1.
Yeah, it says for like the cash 3,000, and then it says for the second one for cash it says 900, and the revenue 900. It doesn't say 7,200.
I'm looking in the email now. I think you only gave us problem 2. Let me double check though.
There's 2 handouts attached in the email. One's the 24,000 and one's the 3,000.
Right.
Yeah.
This is the problem 1.
Yeah, in my email I got the problem 1 too, and it says like that's the 24,001 too. So I bet
That's what I got.
Yeah, I bet there are 2 of them in there.
Okay, no, okay. Let me stop for a second. Does anyone need the problem 1 resent?
Yes, I do. I only got problem 2.
Oh, that's weird. Okay.
Yeah, I need problem 2 as well.
Okay,
problem 1. Sorry.
Problem 1, yeah.
Give me a second. We'll stop sharing here. Okay, so let's see. I got to. Okay, so I'm going to send everybody. Now, if you already have it, don't. I mean, this isn't. You're going to get an email, but see, chapter 4. For handout problem 1.
Professor Taylor, can I ask you a question about the Blackboard real quick?
Absolutely.
For activity 2A,
Yeah.
I can't find the sheet that we were using to fill out our answer sheet. Like I can't find the original on the Blackboard.
Well, that's from the textbook.
Oh, it is?
Yeah,
Okay.
the textbook problem. Yeah. I think it's in the video. I could be wrong. Maybe you know it might be small in the video. I can't do side by side here for some reason. Well, I don't know. The viewer can do side by side, but I can't. I can do a gallery which shows everybody, equally, but I can't do just two side by side. Let me check on here to make sure but I think I tried to do this before. Yeah. I learned how to do polls. So next time we do the multiple choice questions, we can do that. Yeah, see, it allows me if I have dual monitors to show, but I don't have the dual monitor set up. I could. I got a monitor right here for a different computer. Maybe I'll look into that. Okay, so let me ask you, is there anyone that did not get the problem 1? We all got it? I should ask that differently. Is there anyone that did not get it? Okay, I'll go back to, I gotta do something first. I found out that one of the reasons I get those weird shading things is that if I put my it's just a long story. I think I want to tell you guys all my problems. Another thing. I was 8 years old. And let me switch it here. Oh, now I got a weird thing on my screen. See? Isn't this fun? Watch me learn how to use a computer. Okay. So let's see. 17. Or excuse me, 17 revenue was the other side of this. So 7,200. I think though, when I start doing these in the future and I'm doing problems and stuff, I think I'll just go ahead and do it this way. So they're all on the same screen so that everyone's, not this hunting around trying to get your screen set up and all that. And you're trying to get my screen set up. Okay. So the third one here, we have cash at 360. So you guys kind of see what we're doing here. Just kind of taking them and just make sure you get the debits and the credits on the right side. So, this is a cash, this is a debit. Because it makes a difference. Unearned revenue is 360, and that you recall that was when someone pays us ahead of time. And if this account down here is actually a liability. It's unearned revenue. Okay, the fourth one is utilities expense. $176. Let's make that one orange. And accounts payable. Is 576. I can copy these. Oh, I can't. Okay. Equipment, 30,000. And you can't tell, you know, if you're going through, you can look at these journal entries, you can kind of figure out what they did. They bought 30,000 of equipment. They paid cash of 7,500, and then they borrowed the other accounts payable for 22,500. Okay, so cash 7,500. Let's make that up. Make that a color. I'll make it green. And we have accounts payable for 22,500. You can kind of see what we're doing here. We're getting them all kind of sorted out. We're getting all the cash ones sorted out, the accounts payable ones sorted out, and all that kind of stuff. So we're kind of getting them all in their accounts so we can actually see how much is in those accounts. Okay. So accounts payable 9,000, cash the credit. So the debit is 9,000 accounts payable. So it looks like we paid off some accounts payable. Not all of them, but 9,000 of them. And cash. By the way, you know, they call this posting. Okay. Right over there. Okay, let's undo what I just did here. Posting, we call it. I'll write it down here. Yeah, so they call this posting the journal entries into the general ledger. Okay, 9,000, we got that. Oh, this is a new one. Depreciation expense and accumulated depreciation. Okay, depreciation expense, we know what expenses are. And the credit is accumulated depreciation, which I don't know if we've had yet. And here's kind of what happens with it. This equipment doesn't last forever. And so when we depreciate it, we depreciate this expense, we take a little, you know, it lasts for 10 years, whatever, we take 1/10 of it. Anyway, a little bit every year we take off of the equipment and expense it. You say, okay, this equipment's not going to last forever. At some point, it's going to be used up. So we have this accumulated depreciation, and this account goes against the equipment. And we'll see more about that in the we do the financial statement for this. But the equipment and the accumulated depreciation, these two accounts go together. And you'll notice that the equipment has a debit, and the accumulated depreciation has a credit. You know, so the accumulated depreciation goes against this equipment. It reduces it, I should say. But we'll see it more of it. Get the financial statements. Okay, supplies. Oh, another thing I want to tell you guys too, and I don't think I made this clear, obviously, because I've had a few people ask me about it, and that is you can definitely submit pictures right into Blackboard. You can submit 10 pictures in there. So you don't have to rewrite stuff. You don't have to fill in, if you're doing it by hand, you don't have to redo it. You can simply take a picture, again, as many pictures as you need to take, it'll take them. Okay, supplies goes up, the cash goes down. So we must have paid cash for that, whatever it was. Supplies. Okay, supplies expense. 1620. So $1,620 for supplies expense. And that is coming out of supplies. Credit side of supplies. And by the way, you can kind of see here, this expense. It's not really paid in cash. It's these supplies that we have are going out. We no longer have 2160 supplies. We have 2160 minus whatever that'll be. We'll get there in a little bit here, but okay. Wages expense. 1,440 debit. And cash. Insurance expense. 864. Debit side. And cash on the credit side, 864. So cash and revenue. So cash is 5,000, no, 22,520. Revenue. Okay, prepaid rent, 1,386. And cash, 1,386 credit. Oh, I thought we only had one more. We have two more. Unearned revenue is debited and revenue is credited. Okay, so unearned revenue, 144. And revenue, 144. Okay, now here's what's happened with that. So this is unearned revenue. This is when someone pays us ahead of time, but we haven't earned it. Well, now it looks like we've actually earned 144 of it. So as we earn it, as we do our job, whatever it is that we're supposed to do to earn this, we count it as revenue. And this revenue up here, revenue by definition is earned, but you can definitely think of it as earned revenue. There's unearned revenue that's a liability, but once we do our work, we count it as a revenue. So whenever we do our work, even whether we get paid or not immediately, we count that as a revenue. So in this case, we did the work. We're going to count 144 of it as revenue. We still got to do some more work for them. We'll figure out how much later on, but we did the work for $144. Excuse me. I just bored myself with that. Be careful, I'll fall off my chair. All right, so rent expense. Okay, rent expense is 693 debit. And the credit is over here, 693. Okay, so they paid rent ahead of time. Now they've used up some of the rent, you know, whether this is for 1 month or whatever it is. But they used up some of it. So, you know, they took it out of this asset. They are no longer paid for 1,386. It's 693 less. We'll figure out that. Okay, so here's how this works. What we're going to do is for each of these accounts, well, each of these accounts that we need to do this for, we're going to add up the debits and the credits, and then we're going to compare them, and whichever side is biggest is going to win. So I'm going to go ahead and add up the debit side here and the credit side, and we'll see where we're at. And since you guys have already been in the class for a while, you know you may need to check on my work. I got $34,080. And I'm going to add that one up again. Cash account is the one that people make. I shouldn't say people. The cash account is the one that I make the most errors in because it's tons of transactions happen in cash. Almost everything runs through cash at one time or another. No matter what it is, it goes through cash at some point. So there's usually, even though the account itself might not have that much in it, there's usually a whole bunch of stuff going in and out of it. You know, it's almost hard to come up with a transaction that doesn't go through cash. You know, maybe if someone bought something with, you know, land or something, or gave you equipment to buy something, maybe that, you know. But again, it's hard almost to come up with things that don't run through cash. Okay, so that's the debit side. So we're going to do the credit side. Plus. $22,350. And I'm gonna add that one up again, just for kicks. Because if that one gets messed up, it's, yeah, it can be a real pain to find it. Okay, so here's what we do. So we got the total debits and the total credits. So what we're going to do is subtract them, and the big side always wins. And what I mean by that is the largest size, whatever's left over when we subtract them, is going to go on that side, and that's going to be the balance. So in this case, it's going to be a debit because 34,000 is more than 22,000. So 34,080 minus 22,350. Yeah, 34. So 17, no, 11,730. Okay, so this is our ending balance for our cash. So how much cash do we have? We have 11,730. Is that right? And by the way, don't be afraid to tell me that it's wrong. It's worse when I get a bunch of students coming to me, how'd you get this number? Well, I made a mistake. That's how I got that number. Okay, now, but here's the thing, and here's why we're doing this. Looking at the first page, you would be hard pressed to find how much cash you have. Looking through all this, these journal entries, you really don't know. But over here, you can figure it out. You can get how much we have in cash. So we have $11,730 in cash. As we go through here, I'm going to do something here. My color coding is getting out of control. Okay. So we had 11,730 for our cash. Some of these accounts just have one thing in them. Supplies. We have 22,160 minus 1620. $1,386. I think this one comes out to be the same. It's just half of that. 1,386 minus 693. 693. I'm just kind of highlighting all these. Okay, here. All right, so we have to add that one up. Those are all going to be credits. Talk about revenues are always credits. They're always credits unless something strange happens. Error or something like that. Accounts payable. We have 9,000 on the debit side, and on the credit side, we have some other number. $23,000. $76. So 23,076 minus 9,000. 14,000. Yeah, so some of these, you got to add up. You got to add up both sides and then do it. Okay, this one. 360 minus 144. $216. So there's 216 of unearned revenue. We still owe services for 216. No, it's not. Here's one. Since this is their first year of operation, the retained earnings is 0. There's nothing to retain. You have to have net income to have anything in retained earnings. So if you didn't have net income, which if you didn't exist last year, you're not going to have anything in retained earnings. There's nothing to retain. This year, hopefully, you will have something to retain. Question on that? Okay, I got to do something kind of funny here. Not ha-ha funny, but like this kind of funny. So what we're going to do next, oops, not that. What we're going to do next is on the trial balance, we're going to post what do you do, taking these numbers from the general ledger and putting them in the trial balance. Now, the trial balance is there to make sure that your debits equal the credits. And if they don't, you got to figure out why, because the last page on here, we're going to make financial statements. And if our debits don't equal our credits, the financial statements aren't going to balance. So the trial balance is really there to make sure that you don't miss anything. I'll also tell you though that like in business, as the year goes on and you're in business, you're a manager or whatever, they're not going to make financial statements every week, but you want to know where you're at. A lot of times you'll be looking at the trial balance. If you want to know what your inventory is or whatever, the trial balance is probably what you're going to be looking at, rather than the financial statements, which they, like you say, they probably aren't going to make them every week or whatever, however often you want it. Okay, so what we're going to do is take each of these and move them over. So cash, copy my cash. Now make sure you get the debit and credit right. Don't really want that. I might just retype those. If you didn't do the goofy stuff like I did, you may want to just. Okay, so supplies are 540. Oh, I know what I can do. As I go through here, I can change these from green to yellow as I put them in. Let's see. Okay. Prepaid rent. Equipment. Accumulated depreciation, now be careful. This one is a credit. Okay, accounts payable is a credit for 14,076. Unearned revenue 216. Credit. Common stock 24,000. Credit. Retained earnings. You don't have to put this one in. I put it in. I don't know why, but okay. Accounts payable. No. Revenue. What am I saying? I'm saying crazy thing. Revenue is a credit for 98.64. $9,864. And now we're going to go through the expenses. Utility expense. Depreciation expense, 3,000. Supplies expense, 1620. Wages expense. Expense. And last but not least, close to now, close to least, but not 864. Okay, so what we're going to do is now to add up both sides. One thing I want to show you here, though, and this is the way you usually see the trial balance, and that is that all the balance sheet stuff comes first. You know, so these are the assets. There's the liabilities, and here's the equity section. And then the revenue and expenses that go on the income statement, those usually go next. I don't know. Yeah, so, you know, this is all balance sheet stuff. And then this down here is the income statement stuff. And that's usually the way you see it. That's usually the way the trial balance will be set up. Okay, we got to add these up. All right. Okay, have the other side. Is there anyone that didn't balance on that? If you didn't balance, what you can do is compare these two, the debits and the credits, and see what the difference is. So subtract them. So for instance, if you subtracted them and you came out with a difference of, let's say, 540. What would that indicate? It probably means that you either didn't add in the supplies to one of the sides, or that you added it in twice. So if you find that, if these don't balance, it's not the end of the world. See what they don't balance by, and a lot of times that'll show you where the where it is. Is there anyone that can't find where that doesn't balance and you can't find where it is? And I say that because it's sometimes it's mildly fun for accounting, accounting class to figure it out. Is there anyone that has this? I don't mean to embarrass. If you want to do it in a chat, put it in a private chat to me. We'll see if we can figure it out where the error is by doing the differences. Now, if you have more than one thing off, if it's off by twice as much, instead of 540, if this was off by 1080, you look through, you go, there's no 1080. Sometimes if you cut it in half, if you put a debit on the credit side or vice versa, if I was to put this 540 over here, the debit side would be too low by 540 and the credit side would be too high by 540. So if you do come up with a difference that you can't find, so you look at this 1080, 1080, you look around, hey, there's no 1080. If you take half of it, that might indicate that you have a debit and a credit mixed up. Transposition errors are another one. So if you entered 450 instead of 540, if you subtract them, you know, if the number, if the error is, so the error here would be what, 540 minus 450 equals 90. If the number can be, if the error is divisible by 9 cleanly, and it gives you a whole number. It's probably a transposition error. So if it's off by 90, you look around, you can't see a 90 anywhere on here. You look at it be, if you can divide it by 9 and it comes out to be a nice round and a nice whole number, 1, 2, 3, 4, 5, whatever, it's probably a transposition error. So whenever you reverse numbers like this, they call that a transposition error, and you can find it if it's divisible. If it's divisible by 9 and it comes out nice round number. Now, if it comes out to some strange number, 3.721, you know, it's not a transposition error. But transposition errors are also, you know, they're always divisible by 9. Okay. Lastly, so now we've got a trial balance. And I got to bump this up here. Okay, so now we're going to do our financial statements. All right, what goes on the income? What does the income statement start out with?
Cash.
Close. The balance sheet's going to start out with cash. What's the income statement going to start out with?
Revenues?
Yeah. Yeah. So revenues. Maybe I'll mark these as we go. Okay, so revenues, 9,864, and we subtract out our expenses. Copy that over if you want. Copy the numbers over too if you want. Okay, so I'm going to put negatives in here. You don't have to do this. I'm just going to put it in there so that I know that they're minus. Okay, so this will give us our net income. The 9,864 is what came in. These are all the expenses that went out. And so what's left over will be our net income. Okay, time for Mr. Calculator. $1671. So this is our net income. So that's what the, I'm gonna do that one again, just to make sure. Because if this one doesn't, if this one's not right, none of this other stuff's gonna be right. So I'm gonna do that one again, just to make sure. Good. Okay. Okay, statement of retained earnings is a little bit tricky right now because how much do we have in our retained earnings to begin with?
0.
0. Beginning retained earnings is 0. First year of business, we don't have any. We're going to add in our net income. Plus that. Dividends, we didn't have any dividends, I don't think. Nope, no dividends. You have to put this in. Just filling it out. So this will be our ending. If we had dividends, we would take them out. Our ending retained earnings would just be the plus 1671. But it'd be 1671. Okay. All right, let's go to the balance sheet. The assets, and someone already mentioned the first one would be cash. All these would be assets. What happened? Oh, okay. The depreciation. Oh, I want to talk about that one anyways. Okay, and we're going to copy all of these down. And accumulated depreciation, you'll notice that these are all debits and this is a credit. This is going to be a minus. And these, what else do we have? These two go together. And what we're saying is this equipment really isn't worth 30,000 anymore. When we first bought it, it was worth 30,000. We've used the equipment for a year or whatever it is. And now we're saying that it's worth $3,000 less. Okay, so we're going to subtract the 3,000 from 30,000. Now, a perfectly sane person might say, well, why don't you just take, the 3,000 just right off the equipment? Instead of doing this, debit the equipment for 3,000 and it'll automatically be, what the value is. There's a reason we don't do that. I'm going to talk about it in chapter 3. But the way that we do it is that we set up an accumulated depreciation account, and this goes against the, so these two accounts go together forever, well, or until the equipment's gone. Yeah, this will keep depreciating. And we haven't talked about this. This accumulated depreciation is what they call a contra account. And that is that it goes against another account. In this case, the account it goes against is the equipment. So this accumulated depreciation is a contra account. It goes against the equipment. And there's a few more of them, but this is one of the big ones. It's actually called a contra asset. Another time you see it, it's called a contra asset. Same thing. I mean, it goes against the assets. It goes against an asset, I should say. Oops, too many T's. Okay, so these are all done. Okay, so we still have accounts payable and unearned revenue. Those will be liabilities. So this will be total liabilities. Those two together. Oops, good here. 40,076 plus 216, 14,292. Oh, I never totaled up the assets. I'll do that. I'll do that later. Okay, let's go to equity. I'm going to do something wrong here, and you tell me what I did wrong. What did I do wrong?
You didn't put the ending retained earnings?
Yep. This is what I should have down here. Okay, so this will be the total equity. Okay, so total liabilities and total equity, we have to add those two together. So 14,292 plus 25,671. 39. Okay, oops. Okay, I gotta add up the assets now. And hopefully it should come out to that same number. I did it. No, it's not. Yeah, so that is, so those financial statements. Again, you guys have already done those before. So I knew. But what is new is, you know, that these journal entries, they kind of seem like they're completely different than the income, the financial statements. You know, these don't seem like they have any relevant, whatever. But actually, that's where they come from. You know, these journal entries, you go into the general ledger, you find your balances. Trial balance is really just the general ledger, but boiled down to a single account. And then from that, there's all this stuff here, just cluttering it up. Oops. Okay. And so then this is, you know, taking those numbers we got from our balances and making financial statements out. Question on that? Okay, I'm going to assign the problem 2 for homework for next week. When we come back, we're going to do a kind of a short exercise on classified balance sheet. I'll leave this up in case anyone needs it. But so why don't we take a break? Let's say, what time is it? 7:17. Let's say be back at 7:25. There we go. All right. So be back at 7:25. So if you want to take a break, go ahead and come back. We're going to start on the hand. Oh, let me ask. You know, I don't think I have this in Blackboard. Let me see if I do. I don't. I'm going to put the classified balance sheet handout in Blackboard. I do not have it in there. Let me load that to Blackboard. Okay, let's go ahead and get started on. All right. Let me find you. Suppose I go to the grocery store and I want Cheerios. Where am I going to go to get Cheerios in the grocery store?
The food section.
Food section, more specific. You're right. I want Cheerios. Specifically, where am I going to go? Which aisle?
Cereal aisle.
Cereal aisle. Notice I didn't tell you what store it was. Everyone knows that you go, they're going to group everything that's similar. All the cereals are going to go together. A grocery store just takes everything that's similar and puts it together so that you know where to go to buy stuff. We do the same thing in accounting. We do the classified balance sheet is the same thing. We're going to take those items that go on the balance sheet that are similar and lump them all together. Look how giant my hands are when I get close up to the. Okay, so the we're going to, just like the grocery store does, we're going to group those things that are similar so that if someone's looking for something, they're not looking for Cheerios, but if they're looking for cash or whatever, that we'll know exactly where they can find it. And that's kind of what this whole classified balance sheet is about. Okay, so here are the different types of assets that we have. And we group them according to if they have similar characteristics. Now we have current assets and current liabilities. These are all things that are going to take, they're going to be either paid for or turned into cash or used within 1 year. So when they say current, we didn't do this in a picture. So current assets are assets that are either cash or they're going to be turned into cash or used within 1 year. And same thing with current liabilities. They're going to be paid for in the next year. Could be earned if they're unearned revenue. So the current ones they have a 1 year span. Everything else is more than a year. Okay, so if you have an asset that's going to last for 5 years, it's not going to be a current asset. Current assets are only for, within a 1 year time frame. There's a few exceptions with that. If they have wine or something like that, they'll have inventory that's maybe more than 1 year. But for the most part, you're going to have, it's going to be within 1 year. They're going to be used up or turned into cash. Okay. Investments. These are long-term investments, more than a year. If they're shorter than a year, they go into short-term investments. Marketable securities is a more recent term, same thing. But these are long-term, so more than a year. Property, plant, and equipment. This is where you see most of the big stuff. When you see a corporation, a lot of times this is what you're going to see: the land, the building, the equipment. Even in some place like Walmart, they have a bunch of inventory in the store, but the store itself is a building. All the stuff, all the racks and that inside are going to be equipment. Shopping carts are equipment. The land and all that stuff. So, the property, plant, and equipment is really the big stuff that you actually see. Intangibles are things that have a value, but the value is not physical. So copyrights could be for software, it could be for a book, it could be for whatever. But copyrights are intangible. In that you say, okay, I have a book and it's all written down. I can pick the book up, but the value isn't in the book. The value is in the ability to publish that book and sell it. The paper is almost worthless, but it's the book itself and the ability to publish it. Things like trademarks, franchises, patents, all those things they have a value, but it's not physical. You can't sit in it and ride around or anything like that. It's the value is not physical. Other assets are anything not listed. This is for wacky stuff like pension assets and weird stuff like that will fall into here. But for the most part, the biggest chunk is going to come. The biggest two ones you're usually going to have are current assets and property, plant, and equipment. Many companies will only have those two assets. Current assets and property, plant, and equipment. Okay, on the liability side, we have current liabilities and long-term liabilities. Current liabilities, a year or less. Long-term liabilities, more than a year. Equity section. We'll talk more about this later on. But the equity section, we have stock. We're used to common stock. There's another kind of stock called preferred stock. It's kind of a wacky stock. Doesn't have any voting rights and gets a set dividend. A lot of companies do not have preferred stock, but common stock they have. Additional paid-in capital, we won't worry about that now. It goes along with the stock. Retained earnings. Treasury stock is kind of interesting. Treasury stock is when a company buys back their own stock. So IBM will take their money and buy back IBM stock. That's what treasury stock is. So It's kind of wacky. Okay, so we're gonna do one of these. I don't know. I'm gonna pull up. I'm gonna put the problem right in the handout here. I think I'm gonna move this. Can't be the end, is it? Okay. And I can't send this out to you, but I'll put it on the screen so that it's you know, you can see it that way. What I'd like to do is get have the textbooks included in your class fees. I taught at a school that had that, and that was kind of neat because you could you could put the problems right in the handouts. Oops. You know, there's no searching around and trying to find them and all that kind of stuff. Okay, so I don't know if you can read that or not. It's kind of small. If you can read it, I'm having trouble. But anyway, so these are some accounts that they have. This is exercise 4-12. What we're going to do is kind of plug them in, see where do they go. And all right. So let's go ahead and I know I'm going to insert my star here. Look. Or I could insert a cube. Let's insert a cube. My cube is not cooperating. Okay, accounts payable. Where's that going to go?
Current liabilities.
Yep. Okay, so I know what I forgot to do. I forgot to put boxes around these. I wonder if I could do it now. Ooh, look at that. You can. Okay, so make it look worse. All right, so accounts payable done. How about accounts receivable? Oops.
The current asset?
Yep. Down one. $187,500. And by the way, if you guys don't want to do these in Excel or something like that instead of this, that'd be fine. You know, I hate to make Excel a requirement for the class just because, well, a lot of people aren't going to be using it. But if you want to use it, you're certainly welcome to. Accumulated depreciation. Where's that going to go? Well, it's for equipment. So where's equipment going to go?
Asset.
It's definitely going to be an asset. Now, equipment, is it short term? Is it going to be in current, or is it going to last for more than a year, most likely?
That's more than a year.
Yeah, so we're looking at here. So it'll probably be property, plant, and equipment.
Mhm.
Oops. All right, I'll put it. I'm going to put it down here a little bit lower. So that is going to be a negative 186,000. That's that contra asset we talked about. Hey. Okay. Cash. Oops. Okay, the cubes are not working out. I've come to the conclusion I don't like the cubes. Where's the cash going to go?
Current assets.
Yep. Yeah, so current assets will be those that are used within 1 year or turn into cash within 1 year, and cash is already there. Smiley faces by him. Okay, so cash 72,000. Common stock. My smiley face. Where's common stock going to go?
Equity.
Equity. And the equity section is really the same as it's been before. It's not gonna. There's nothing terribly interesting about that. Equipment. Where's the equipment going to go?
Current assets
Probably not.
or intangibles.
Actually, it's probably tangible. It's probably equipment. So it's probably going in property, plant, and equipment. Now it is long term, and intangibles are long term. So they will be long term, but probably be here. And there are intangibles that go in property, plant, and equipment. If you you know, if you rent a building and let's say you have a McDonald's and you put your McDonald's sign, all that, but you don't own the building, that build out, they call it, that's an intangible because you don't own the building. You actually don't own whatever you attach to it, but it has a value to you. So the value is intangible. It's not, you know, the sign itself is not the value.
Professor, are you able to make the font a little bigger?
On this one, try. You know, I wonder if I could put them, I wonder if I could stack them. That might be. For this one, that might be a way to go. You got floating guys around here. All right, so is that a little better or no?
Yeah, that's better. Thank you.
Okay, so far we got okay, so let's go to land. Where's that going to go?
Under property, plant, and equipment.
Yeah, that's the property. You know, they could call it land. It's probably maybe a better way to put it. But I think we'll say land, and it was 375,000. Okay, let's go to prepaid insurance. Where's that going to go? Look on that sheet. Where did the prepaid stuff go? Well, first of all, you guys remember it's an asset, so you pay something ahead of time. So where is it most likely going to be? Prepaid insurance.
The prepaid expense.
Yeah, same thing as prepaid. So what classification is it going to be? It's going to be an asset. I'll give you a choice. It could be either property, plant, equipment, or a current asset.
Current asset.
Yep. Yeah, prepaid insurance is a current asset, and also insurance. There's a lot of rules for insurance, but some of the rules for insurance are that you know, if you cancel the insurance, they have to pay you your money back. So you actually can turn that into cash sometime. Okay. Prepaid rent, same thing. Anything that's prepaid is going to be with the current assets. Retained earnings, where does that go? We just did a problem with that. Where does that go on the balance sheet?
Equity?
Yep. So retained earnings, and that was 620,300. Salaries payable. Payables are either short-term or long-term. Now, when it comes to someone's salary,
Long term?
it's probably going to be,
Short term.
yeah. Yeah, you're probably going to have to pay them before, you're within a year. I mean, you're not going to hold their paycheck for a year. So it's probably going to be short-term salaries payable. Although, sometimes you'll have like bonuses and things like that that aren't paid out until, for a long time. And those can be long-term. But for the most part, most people are going to have it as short-term. Supplies. Where are supplies going to go?
Would that be current assets?
Yep. Yeah, supplies are going to be used up usually within a year. Spelling it correctly. And unearned fees. So these unearned is what?
Current liabilities.
Yep. Current liability. Okay. And so some of these, we didn't even have. We didn't have any long-term investments. We didn't have any long-term. Oops. What am I doing here? Didn't have any of those. Didn't have any intangibles. So this is kind of what we had. Okay, so oops, no, these are assets. So total current assets will be all these together, which would be oh shoot, I should have known that stupid box was going to show up. Okay. So I'm just adding up the current liabilities. Current assets. But let's set up the current liabilities. So total current liabilities. $79,700. So here's one of the reasons why we do it this way. Does it look like they're going to be able to pay their bills for the next year? Well, yeah, because their current assets, so it's going to be turned into cash, or they're going to use up. It's going to be $285,000, and their current liabilities are around 80. So you can have $285,000 coming in, and you got to pay out $80,000. So yeah, they're going to be able to pay their bills for the next year, most likely. So this is kind of one of the reasons why we do it this way. It's not just for boredom or something. Okay, total property, plant, and equipment. Abbreviate it. Okay, so 375. Okay, total equity. I don't need a calculator for that one. Add 100,000 under that is what, 720,300. Okay, so we're going to add up to 285,100 plus the 514,900. $800,000 even. Does this come out right? Current liabilities are 79,700 plus 20,300. Yep. Okay. Yeah, so this is our way of kind of breaking it up. And again, companies do not have to have all the categories. Usually companies will have some long-term liability. In this case, they don't have any. But most companies, the bulk of what they have is going to be in current assets. For assets, going to be current assets and probably plant and equipment. There's going to be a few companies that don't fall into that. For instance, like drug companies, their patents on drugs is worth billions. So a lot of times they'll have these intangibles, and it's kind of wild to think about, but they have these intangible assets, things that don't have any physical substance that are worth billions. That's the way it is. So current liabilities, these are you're going to have to pay off within the next year. You compare those to your current assets. These two kind of go hand in hand. And it looks like they're okay. They have at least 3 times as many. So they're probably doing okay. And come down here, they have quite a bit in equity, you know, and no long-term liabilities. Anyway, that's classified balance sheet. So here's what I'm going to put in. Okay. Oops, get rid of doggy. No, keep doggy, because I got to do a. So here's I'm going to put in the for today, for next week, I should say. We just did, oops, did not where you can read it. We just did chapter 4, handout, problem 1. So that we did in Zoom. I'm going to put chapter 4, handout, problem 2. You guys can, you guys can do that. If you have any questions on it, feel free to contact me. And that is homework. And then we just did chapter 4, classified balance sheet. EX, is it 412? So I'll have these things, these will be all be due on the 2nd. Due on March 2nd. So this is the one, this is the only one that's homework today. Will be that, and that'll be it. Any questions? I have office hours on Friday, but you can call anytime you want to. You can, you know, if they don't work, or if you just want to do different hours, that's fine too. Office hours, you get to them from Blackboard, and they're Friday at noon and 6 p.m. And you just click on the link there to the Zoom meeting. If you have any questions, you know, just go ahead and ask, and we'll go from there. But or if you want to do some other time, that's fine too. That's Friday. So if you want to do some other time you have free, let me know. As long as I'm not teaching. The only times I can't do it are Monday through Friday at 6 o'clock. Well, Monday through Thursday at 6 o'clock because I have classes. But other than that, I can do them. I can do almost any time. I also have an 11 o'clock on Tuesday, Thursday. Any questions? Yeah, I did something wrong here. Any question on that? We're kind of late tonight, but anyway, so for next week, the problem 2, which you should have. If you don't have that one, it's in Blackboard, or just contact me and I'll send it to you. But the problem number 2, the handout, which is similar to the number one, and again, I think you guys pretty much got it. It's not terribly difficult, but it is kind of strange in that it's the first time you've seen it, so that makes it a little bit more tricky. But if you have any questions on it, or if if you can't get the thing to balance and you don't know why, contact me and we'll take a look at it. So, any questions? Okay, I think the chapter 2 stuff is due tonight. So if you haven't turned that in, most of you have already turned it in. If you haven't turned it in, you probably do that if you can. You can always turn it in late. I take everything late, but okay. So, yeah, if you have any questions, any of this stuff, but you can always turn things in late. And again, you can also turn in pictures. So you don't have to rewrite stuff, or type it, retype it into the thing or whatever. If you did it on your notebook, take a picture of your notebook and send it in. You do not have to rewrite anything, and the pictures are fine. Any questions on any of that? Okay, and again, you can turn stuff in late. Now, your grade to date will look bad until it gets turned in, because after the due date, I put it into the grade to date. So if you have a 0 for a test, especially, it's going to look bad until you get it in, but you can still get it in. And once you get it in, the grade will go back up. Question, anything? Yeah, go ahead.
There's gonna be no test due for this weekend. Is that correct?
No test. The only thing for next week is the problem 2, the chapter 4 problem 2, the handout. That's the only thing this is going to do. Next week we'll go over what we're going to do for the test for this one. And again, the only reason why I encourage you to keep up with, especially in this class for this one, because it kind of builds on it. The reason we're doing chapter 4 early is that it makes chapter 3 easier. So, yeah. But the only thing, the only thing for chapter 4 is the problem 2. That's it. All right. Any questions? All right. Well, sorry it took so long today. It's, I thought we were going to wrap up around 7:30, but obviously I was a little too slow, which is very strange. I'm usually very speedy. You can just tell by looking at me. That guy's fast. Fast. Okay. Well, I will talk to you guys next week, or on Friday, or any other time you want to set up a Zoom meeting. Any other questions?
Thank you, Professor. Have a good night.
I will. Okay. And Russell, I'll get that stuff out to you.
Thank you.
Thank you. Have a good night.
We will.
Have a good night, Professor.
Thank you. I will.